Good morning. Today is Monday, August 21st, 2023. Tomorrow is our annual Capital Cruise Client Appreciation Dinner. We are sincerely looking forward to showing our appreciation for the opportunity to serve. If any of you have any questions about tomorrow's event, please don't hesitate to reach out. And then Thursday, we have our next capital markets update and outlook event. At last month's check-in, we warned that August could be volatile, and that is exactly what's been going on. So if you'd like to know where we think things are headed next in both the stock market and the economy, then please join us this Thursday morning at 11 a.m. Central Time. We will be live in person, lunch included, at our office, as well as online on our website, LinkedIn, YouTube, Facebook, and Twitter, or now X. For details, links, and to RSVP, please visit the events page of our website. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks extended their August declines last week as higher yields and weak economic data out of China soured investor sentiment. The Dow Jones Industrials average lost 2.21%, while the Standard & Poor's 500 retreated 2.11%. The NASDAQ Composite Index backtracked 2.59% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, slumped 2.83%. Rising bond yields, driven primarily by strong economic data and the release of the minutes from July's Federal Open Market Committee meeting, or FOMC meeting, that pointed towards Fed officials' potential need to raise rates further, weighed on stocks throughout the week. In a week of light trading, typical of August, stocks were additionally buffeted by a string of economic data that painted a flailing economic recovery in China, and warnings of potential downgrades of dozens of U.S. banks by Fitch, a credit rating agency. After the 10-year Treasury yield rose to its highest level since October 2022 on Thursday, yields eased on Friday, helping to arrest the week's downward trend. Retail sales jumped 0.7% in July, the fourth consecutive month of increasing consumer spending on goods. The report supported the growing narrative that the U.S. may be able to avoid a recession in the near term. The strong spending data, supported by a robust labor market, also may have placed the Fed in a more difficult position in trying to bring inflation down to its target rate without more rate hikes. Consumer spending was higher in most categories, including bars and restaurants, grocery and hardware stores, and back-to-school items like books and clothing. Sales of autos and electronics fell, a possible consequence of higher borrowing costs. As always, we will continue to keep our finger on the pulse of what's really going on in the markets. This week's economic news that we're watching includes a report on existing home sales tomorrow, Tuesday. And then we have the Purchasing Managers Index Composite Flash, as well as a report on new home sales on Wednesday. And then Thursday, we have a report on durable goods orders, as well as jobless claims. Looking forward at this week's companies reporting earnings. Got a busy week of companies reporting earnings. You can see some of the bigger names that we are keeping our eyes on this week. So if we are not investing your life savings for you, you can learn more about our personalized approach at smartmixportfolios.com. So Wall Street is slowly starting to talk about an expansion economy and forgetting about any recession fears. July's consumer inflation report was soft, so attention will soon shift to gross domestic product in the coming weeks and resolution to several matters. The Fitch ratings news was a great example. When the news started to circulate that the rating agency downgraded U.S. debt, the stock market started to trend lower. And by the end of trading on August 2nd, the NASDAQ Composite saw its worst day since February. Now, as you can see from this chart, the Atlanta Fed's GDP Now forecasting tool is projecting 4.1% growth in the third quarter. But the blue chip consensus from economists is still seeing less than 1% growth in the third quarter. So, why are these numbers so far apart? Well, from our perspective, economists are dragging their feet, updating forecasts because the current economic trends conflict so sharply with what they anticipated at the start of 2023. Circle this date on your calendar. The advanced estimate for third quarter GDP will release on October 26th. And remember, GDP equals C plus G plus I plus NX. C stands for consumption, G for government spending, I for investment, and NX for net exports. If GDP increases to 4.1%, some or all of these components will affect the overall economic growth. Eventually, the Atlanta Fed GDP estimate and the blue chip economist numbers will start to trend together. How will the financial markets react? Keep joining me here on Mondays and at our more detailed monthly check-ins to find out. With that, our next monthly check-in, like I said, is this Thursday, August 24th at 11 a.m. Central. We hope that you'll join us in person for lunch or online as we discuss the positives, the headwinds, and the outlook for the stock market and the economy, again, during this monthly check-in. This is your opportunity. Look over our shoulder, get an objective analysis of the current environment. As always, we encourage your questions, and you are welcome to invite a friend or family member who would benefit from the information provided. Again, the presentation will be delivered in person at our office here in Eden Prairie and streamed live online as well. All right, that is it for today. Thank you for staying until the end. I have another riddle for you. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. And congratulations to Howie in Eden Prairie. Howie, you stepped up. You beat Roger. Last week, Roger had gotten 2 riddles correct in a row. I challenged someone to step up and beat Roger, and sorry, Roger, but someone did step up. Howie, congratulations. Thank you for participating in our weekly riddle. Your answer was correct. We will get a gift card for coffee on us out to you in the mail shortly. All right, so this week's riddle is, which of these 5 words does not belong on this list? That, what, cat, sat, or chat? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you'd like the answer to previous week's riddles, you can visit our website /riddles for those. And then lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what we talked about here this morning, including our popular weekly tax tip. So if you would like this email and you are not getting it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.